Hello, today is Wednesday, 7th day of August 2019. My name is Derek. Welcome to the Money Charts channel, where, like always, all bets, trades of the like within each's own risk and their own reward. Let's take a look at Bitcoin and the precious metals. Starting off within Bitcoin. Okay, so we've had a move up to this line in here that I got drawn in at 11,570. Right now it's at 11,672, which represents Fibonacci from the lows and the highs, and that would be okay. Which I got a lot of lines in here. This isn't the one that I meant to do. This is Poloniex, but these Fibonacci lines had support come in down here, which is kind of interesting. The one I meant to do was the Binance one, because I already have Fibonacci lines on there. It's Yeah, that's the one I was looking from this low to this high. But those ones were there. You can rewind the tape and put the number, or write the numbers down if need be. But I'm looking at the 11,792. That's 61.8% retracement from this high and this low. The 38.2% comes in at 10,668. And when we take a look at this on a 3-hour term time frame, we're getting a lot of this big volatility, this big failed breakout that endured a successful, very volatile, somewhat long correctionary phase of volatility, of course, highlighted by the 17-hour and the 20-hour stamp from yesterday, where price action came down to that of 11,230 from 12,330, so $1,000 drop, and a lower high here towards this one. But regardless of the fact, still another breakout from this point and looking like the potential of another failed breakout. Not as large, but from a larger spot, or a lower spot, that is, from kind of breaking it in here, and from like 11.5, where this one broke out from like 11.6, $100 difference, but 12.1, 12.3, it's only a $200 difference from this high to this low on the single hour term time frame. It is right now the 11 o'clock hour. Price action did get up to this, just a failed intraday move, because when I woke up, price action was like, oh, 11.7, okay, and then at 12,000, and now back down to 11.6. 15-minute chart, it just happens in one moment. I didn't even check on 1 minute to see its duration of the fall, but it got going at 11:04 and then into 11:05, and then some volatile action, of course, down towards this level here. And still a lot of this big battle between the bulls and the bears. But overall, and I didn't want to go to the 3 day, I kind of actually want to go back to the daily, so let's just do that because that's the best way to show it. When you're in a range bound market, we've had the situation of this low of 3,100, which immediately established resistance at 41. And then it was every single time in a bear market, you got to hold a higher low. And this was a higher low at 33 to the 31. But meanwhile, it had multiple hits on it, and just saying, okay, what's the status? Okay, neutral until it either breaks resistance or, in this case, it was breaking support. So until it broke 34 or 41 back in here, it was just in the sideways mode, which is where we are now. But then from that point, status became breakout mode, and was in that play until it eventually topped, had a little bit of a correctionary phase. Back in here, this was an attempt to go back into a big up move. It didn't do it, but it successfully corrected. And while successfully corrected, we now had a double hit at this area, which when it got above here, the status on May the 3rd was okay. Bull market, let's keep rolling, and had some slow moves early on. The majority of the moves, which started on May the 11th, well, that's when they were, up to this top. And then we had this failed breakout, but originally established resistance at the 82.5, 8,300 mark. And then it re-anteed that level up to 88. But at this point in here, while it was in the 8,800 to really the 6,800 range, it was in the neutral mode until it could get out. And it did get out of this level here, and it went right up, straight up to the close to 14K level. And then, of course, that's where we stand now. So as long as we're in this range of around 9,100 to the high 1,300, this lower high here is about 13,000. So 13 to 14,000 is going to be very much a very key level to get above. And getting above that again and breaking this 14,000, well, that's when we look at the longer term time frame. Because on the weekly chart, we've had the since the low in here, correctionary phase, and it failed on a bearish level and it passed on a bullish level because it failed the bullish level for, okay, we're in here, but now you're supposed to leave the 18 lows and go down. You didn't even attempt to leave the 18 lows with this microscopic long grind higher. So on this point in here, okay, bull market status straight up to this level, and it's in a correctionary phase. But we do see signs that it may be trying to escape the correctionary phase, re-enter the bull market with just what is a small correction. Sometimes they're small, bigger, larger, or large, of course. And anytime you have like 4, 5, 6 periods, have a bit to the 18, and then even not hit the lows, and then leave it, well, you got to give the credit where it's due for what bull markets can do and what markets do when they break key levels. As I've shown the daily, every time it broke the key level, starting with the 41, it had significant moves. And I don't see why in here, at least a small pierce below, which might be 17, 18,000, a test of previous high would be at least where this next break would go on that of the weekly, and again on the monthly, just continuing to hold and pause in there. And markets can't go straight up. They got to correct either through that or through price or through time. It's had a little bit of time correction, so most certainly it's not overextended now at 11,652 as it was the first time it even touched that level for the first time since way back in 2018. So that would be one way of saying, okay, yeah, in order for us to be as overextended as we were here, we'd almost have to be at like, if this goes immediately up this month to like 18, 19,000, we'd be just as overextended then as we were here because it just went like a big green candle up, big green candle up, big green candle up. But if we have a big green candle up that pulls back a bit, has a red pause like this, and then has a big green going up over the, then that might not even be as overextended because we'd be seeing it just leave to the 18 to this point. We have seen on several occasions having significantly larger and longer moves, like we've seen in here. This was the break of this resistance trend line here that had a big phenomenal move. And that's something I was talking about earlier. Let's go over that. Is on the 3 hour time frame, how it's doing amongst that trend line. And I know it's got a ways to go because it is correcting through time. So I'm just going to draw a very quick, not so great copy of the sort. But overall, yeah, holding it as if we fail in here, show any weakness along this point, and then maybe we might have to fill some of this empty gap space. And for where we came from, just looking at this within the range, I gotta think I want this must hold area to be somewhere around here, which is it around the 10.6 to 10.8 mark. Overall, Bitcoin dominance is surely in play. When I look at my codes on the alt sides, I got Bitcoin up 1.6%, GRS is up a third of a percent, and then everything is down. We got the best loser is Ethereum Classic, only 117, with the worst one being DGB, which is having a lot of interesting selling volume. And this is actually Poloniex is going to probably be different. It's on Bittrex that's happening. I don't know if it's got anything to do with Americans not being allowed on that site or anything to do with that or allowed to trade it. I'm not too sure. But on DGB against, there's two major sells in a row. And this one came down, I think, 15 Satoshi. Okay, it's not on there anymore. Hello, it's at least 2-1. Well, this one here happened, it said 1 hour time frame, August the 5th. But on my Binance account, or Bittrex account, I had this one I see that came down to 15. So anyway, let's go on to the metals because they're doing well. Gold's up 2.15% over 1,506. Daily chart, ooh, 1522 level. We're pretty much getting there. I kind of expected this was going to happen, and it's happening. Sweet little gains. But as it comes down to this on the monthly, this is a technical, what's the status of the market? It's breakout mode. And it will be until it's not. And in breakout mode, there's going to be wild corrections back and down. That's going to occur at times, but the momentum is higher and having very fast, ferocious moves that can go higher. First, of course, we're looking at this 1522. I'll be interested to see any type of resistance in here, but more importantly, I would expect it to pierce above it, move to like maybe the 1540 area. And if we don't find resistance there, I'm going to be looking next at 1670 almost, and probably pierce above it, close to 1700 even. And then we got the low 1900, high 1800s, 1900 basically, because the high is 1920, I believe. 1912 was August 1st, 2011 month, or August of 2011. And then it was 1920 and 94 cents in September of 2011. As far as our moves again today, it's ever since this low here on August the 1st at 8 in the morning, it has just been continuously nonstop. And of course, the spectacular move, breaking this above this level of resistance. And what we can see, just even just the signs in here, when you see like a pause period after what occurred, this really was no shell shock to me that this is doing what it is doing. On the silver, gold to silver ratio is going down, and gold's up 2.16%, which means silver is doing better. It's up like 3.5 or something, I would think. Yeah, 3.86%, now 1707 on its daily term time frame. A significantly nice break. It's gotten above this how many times hit resistance? Well, first it was $16.58 on the July 19th. Then that got upgraded to 16.665, retested on that day, although pretty much this one hit at the same time. And then it came up a little short here in this failed move. But just within here, just holding the 18 average of highs from this sell down, rally it back up, and then hold it pretty close to its high end and in this congestion area. Oftentimes from failed moves in one direction comes fast moves in the opposite. Well, this is breaking out from the highs very noticeably and getting above the key levels of resistance on the 3-hour term. There we can see just the little hit towards this area coming close, sell off big, but and this one period itself coming up, yeah, nicely, but correcting well within the 18. Extra pullbacks in here, going below, so it filled some of this empty space. But obviously, as it got above this resistance level, it has been significantly a very, very, very good move. Looking at it via the ratio, what's palladium's down 1.33%. So the palladium ratio against silver would actually have a pretty decent move in itself. I'm not going to show it, but the gold to silver ratio, which did have 8 consecutive days down, had a very decent size rally retracement to get above the highs. Now we'll see. It's a lot of like a noticeable level. So it's gotten above it. So be it, because on the 3-day chart, it's at the resistance. And I can even go further and just go and put in 2 days. I mean, I could just go like this. Yeah, this is the easiest way. Oh, now it's at the 18 low. So no matter what, I can always play around with the time frames to get it where I want. But in a case like this, I kind of want to do it because big high, big low, and definitely a noticeable high. So therefore, if I see this ratio, and I know people, actually some people do trade, but I was gonna say I know people don't really trade this, and it's only a matter of division. But technical analysis could easily work on these ratios as well. Seeing this come down below in here, good chance that the silver market is going to have some phenomenal moves as well. So going back again to the silver, just so we can look at the longer term time frame of it, now up 3.9%. Still has a long ways to go as far as getting out of this trend, because the sideways range is, well, 2019. These lines in here work so well for it, and it's really only getting to the middle part of this range as it is. And I believe silver under $100 is cheap. Thankfully, it's even much, much, much much cheaper than that. And the reason why I say 100 is because, and I don't know how good my drawing is going to be in here. Well, the reason why is because it's just a small move. And I wish I could get the years beforehand. But silver was at 50 before, back in 19. Terrible writing. 1980. And then it pulled back down to like 4. And then just stayed in this range. 4 to 8. Through most of the 80s and the 1990s, all the way up to like 2004. And amongst it, it was in a long, long, um, call it manipulated if you want, but definitely suppressed. And you can tell intentionally suppressed. And thus, it had a good move, but only to reach its previous high. Getting back up here, when you have key high, which is 50, and then you make a key low, which was below 4, which is a higher low from where it was before, like $1, even a quarter. And then you retest that high. Again, this is going back a long, long time now, 40 years almost. And almost at its anniversary of 4 years, 40 years, because it was January of 1980. And then you make this matching high, and then a higher low to here, which in this case is going to look in like $14, $12 area, and that's a higher low to the 4. And then you break the 50, well, you're probably going to have a spectacular move. And $100 isn't that spectacular, not in the long-term time frame. Not when you went from like $1 to 50, so a dollar and a quarter before. It was 1968, 1970 area went down to like a buck and a quarter, maybe even 71 or 72. But late 60s, early 70s, it was in the low dollars. So it went up like 40 or so times from the low. So therefore, even 10 times on this low, and I think it's going to do much higher than that, would be like 130, 140. And I think getting out past this 100, then we are looking at like 2, 3, 4, 5, 6, several hundreds of dollars, especially when more of this financial mess within the debt-based monetary systems, global debt-based, because Federal Reserve, Bank of Canada, and all of the other central banks in the world, they enact the very similar same policies amongst the monetary systems they have and their currencies, which is why I think right now, holding the physical gold, holding the physical silver, to me it's safer than the cryptocurrencies because 10 years from now, I'm very confident in gold and silver. I'm not comfortable or confident, same thing, really, with both the fiat currencies and cryptocurrencies. Cryptocurrencies is like a wild card game. It's like a jackpot gamble, bet. For I realized I could have silver and hold it for 10, 15 years, and I could hold Bitcoin and Litecoin and Bitcoin could be up 20, 50, 100 times better. And it could be the world's reserve currency, Bitcoin might be, or Bitcoin Cash might be, or Litecoin, or maybe another cryptocurrencies that is the big one, but Litecoin and Bitcoin still better than gold and silver. But I wouldn't put my life savings on that by any means. And then having fiat currency, just knowing you can't touch it for 10 years. You put $1,000 or 100,000 or a million in, and you're going to have that same $1 million. And even if you know you can get 3% or 2% a year, I still would not want to do that. I'm going to take a quick look at the stock market. SPY's down 1.14%. Anything that I should know? I mean, it's not like I'm trading it. Whatever. Okay, so what I'm going to take a look at is how these markets do against the national debt. And right now, the national debt's in a very solid bull market. Higher highs and higher lows. Path of least resistance, no resistance seems, is higher. $22 trillion. Taking the Dow Jones and dividing it by this. Kind of, stock market's in a downtrend. This is the Dow Jones from 1967 going down and then up here, but that just shows you how large the stock market rally is. Well, That's the debt-based system, really. So now let's take a look at gold against it too. We'll give it another 0. Sort of the same thing. Let's take a look at this on the quarterly instead, though. Okay, how about silver? So you can see gold's doing well, but inflated against before back to 2011. It's got a long ways to go based on that. Silver even further. I mean, it's still at this lower level. And this high here is 34.72. So that's like almost 5 times. Not quite. And silver is 17, so not quite 5 times would be like 85. So inflation adjusted, that $50 high just from like 2011, just based on the national debt itself only, would say that $50 then is like 80 today. But anyway, thank you for tuning in. Have yourself a great day. Bye-bye.